big week in markets as the Fed, as you mentioned, meets to decide how high to raise interest rates. Signs of inflation and the economy cooling have led to some optimism in crypto markets, even in the face of continuing concerns over FTX and other exchanges, and whether the collapse of FTX in particular will lead to more contagion and tough new regulations. And joining us now to discuss that topic is David Duong. He's the head of research at Coinbase Institutional. David, good Monday morning to you. So let's take a look at the markets first. Bitcoin and ETH have outperformed equities this year and are continuing to rally. What are some of the reasons for this uptrend?
Yeah, thanks for having me on. I believe that a lot of the deleveraging that we saw in 2022 certainly has opened the door to the performance we've gotten in 2023. I mean, a lot of this, I do believe, is still part of a bear market rally that has a lot more to do with positioning and technicals rather than necessarily the fundamentals here. We were expecting that coming into the year, that financing markets, for example, would be disrupted, so that crypto would actually have a pretty tough first quarter. But I think that the sentiment was so depressed coming out of 2022 that it actually left a lot of room to the upside. And certainly, I think markets started to take the opportunity. And as we started pricing further and further the idea of a soft landing in the United States, I think we started to get this better rally, and it's gotten a lot more momentum than I would have expected.
So, David, as I said earlier, it seems like right now, at least, a lot of the narrative as to what's moving the crypto markets, it's the macro story. But of course, crypto is still, compared to other asset classes, still relatively thin. Were there any movements inside the markets themselves? Maybe couldn't be explained by macro. It's individual institutions, et cetera, taking large positions such that it would cause the price to go up to 23,000 from, let's say, 17 or 18, what we saw post FTX. All of a sudden now we're 40% up on the year. Why is that? It's got to be more than just the macro story.
Yeah, I think something that has definitely been unusual about this particular rally has been the timing of things. And I think what you're alluding to is the fact that a lot of the breakout rallies we've been getting has been happening on the weekend. So it's been happening on a Friday night. This weekend it was happening on Saturday. I'm talking about New York time. So some of that's unusual because if indeed this was a bear market rally driven by, say, short covering, typically, as you guys probably already are familiar with, like things like that tend to bring in a group of entities. So it would be, say, 25 entities kind of doing a short covering move, which actually propels the move higher. In this case, given the timing, often these are low liquidity periods where it's very likely only two players are involved. So it could be a computer model. It could be someone who's taking advantage of the market. It's unclear. I think that we tried to actually overlap the timing of this with, say, like the Asia markets, because that would have coincided with that kind of time to see if there's any premium or discount on the markets in Asia compared to the United States or Europe. We're definitely not seeing any. And so it's very unusual to track. I do not have an answer for why that's the case. But certainly, I think that's one thing that bears observation to see what's actually moving this.
So now, correct me if I'm wrong, because I might have lost a little bit of it, but you're saying that Fridays and Saturdays, when they have low liquidity, you're seeing these kind of large moves or a couple of players in there. Are you seeing that within Coinbase itself? I know it's a separate. These are separate parts of the same Leviathan, but nonetheless, have you seen any internal flows that would suggest some sort of movement at those hours? Are you seeing unusual pops in orders that have no explanation?
Well, certainly overall, I would say volumes have picked up and they're much higher now. So like I said, some of these moves actually have some of their own momentum here. But it is interesting to see that, for example, altcoins have actually had a lot of strength here, which is kind of unexpected because the way these cycles tend to work is that you tend to see Bitcoin and then Ethereum and then into the altcoins. But here it's very much being led by the altcoin space. But specifically to your question, as for pop-ups generally around those times, like I said, we've been looking at the premium discount kind of levels between our exchange versus what's been going on in more Asian-based exchanges. And so far, it hasn't revealed anything.
What can you say about the volumes at Coinbase Institutional? Are institutional investors interested in crypto, or has the fallout we've seen with FTX had a chilling effect, or vice versa? Because of that fallout with FTX and questions over Binance, people are flocking to a more regulated exchange like Coinbase. What are you seeing?
So I would say the secular trend for institutional adoption hasn't changed. Like, it's still here. Many of the institutions we spoke to, even in the midst of the FTX situation in November into December, many of them recognize that these are cyclical developments, not FTX in particular, but I'm saying the way the markets are moving. So many of them kind of have said, you know what, I want to be prepared as the next cycle kind of starts to begin. In order to do that, I need to lay the foundation necessary to be able to trade that. So we haven't seen a real sharp adjustment in terms of institutionals pulling back. Quite the contrary, I would say that institutions are still here, and we're getting amazing names kind of coming into the space, still looking to do some work here.
I wonder if Coinbase has made any changes to the way it runs its business as a result of the FTX collapse and fallout, and whether or not there are questions around, what is a security?
That's a little bit outside my purview, to be quite honest. I mean, I do follow the regulatory environment, and I am looking at what's going on in Washington and outside of that. Certainly, I think there's been better progress outside of the United States as far as MiCA in Europe, or how BAR is proceeding. And we're just weeks away now from dropping the new rules to see how, crypto asset service providers are going to be treated. So I think all of that is going to be very exciting. We know that, for example, in Hong Kong, there's going to be new rules coming out that's going to be start implemented in March. So I think that the US is watching. We're looking at what's going on in other regions. We want to make sure there's no regulatory arbitrage. I think that people are very familiar now with what's happening between the SEC versus CFTC, who's going to regulate that, issues with trying to do like regulation by enforcement. I think all of these things are going to come into play. And certainly I would expect a lot more developments in 2023.
So related kind of to all this, you mentioned before the movement and the altcoins as potentially driving this current market, or at least having a role in it. First of all, I want to know what is driving that specifically, and then second of all, related to it is, of course, we're seeing this crackdown, if you will, on crypto lending in the United States. We're seeing a lot of, as you mentioned, regulatory movements in there. How does it affect the overall institutional outlook towards alts, given that so many are involved in the lending business? Does it change their approach to the altcoins? Does it change their business in any way? Are regulators basically killing the crypto lending business, at least in the United States? And what does that mean for alts?
Yeah, so to take the first part of your question, I would say that it has been surprising to see the movement and progress on some of the alts. And some of this is idiosyncratic, right? We know that there are expectations of on-curve finance about a stablecoin launch, for example. We're seeing that the NFT movement on Aptos, you guys had Aptos on last week, I believe. Certainly, it's strange in some ways to see that a platform with only 50 developers and, between 15 to 30,000 actual users is actually seeing as much kind of movement as it's gotten. There's no, I would say, singular thread that seems to be connecting all of them. It does seem that they all have some of their own kind of developments that are kind of propelling them. I think that if the environment wasn't more favorable, it might not be happening. So that's probably a big part of it. It kind of falls back on the macro side. But to your other question on financing, financing has actually done a lot better, as I kind of previously said, than I would have expected at this point. I would have thought that it would still taken a few more months to kind of clear out. I think that we will see that there's going to be a change in the underwriting standards, collateralization, asset liability management, rather, that is going to affect that space. But we've seen that if you look at C5 financing rates, they've come away from the 12% max levels that we had in early December down to around 7.5%, 8.5% for Bitcoin, for example. So we are already seeing that we've dropped away from the double digits into the single digits.
So
David.
3% premium on top of inflation.
David, thank you so much for your commentary.
I would say the range is like lower on the min side. It's still closer to 3%.
All right. We always appreciate you having on our show. Thank you so much, David. That was Coinbase Institutional Head of Research, David Duong.